Good morning, everyone. Dan here with Tradingology.com in the trading room for August 10th, 2021. Good to see you guys on this fine Tuesday. As usual, we do have Dave joining us from the Strong Market Workforce team. Awesome people. Good to see you, Dave. How you doing on Tuesday?
Good morning, Dan. Good to see you. Doing well.
Quite the little roller coaster ride we got going on this morning.
Oh boy, did you see the Russell 2000? It was incredible. Just incredible.
And it's still continuing.
It's like this.
Yeah, it's one of those, this is squeezed in so much to see it that you can't really appreciate how big these moves actually are when it's bouncing off of these zones right here. And the NASDAQ's currently taking a dive at the moment. So watch out, anybody that's trading tech right now. On the daily chart, or excuse me, on the intraday chart, it just dropped through a 200 moving average on a 10-minute.
Wow. That's it. Yeah, so the 200 period, yeah.
Yeah, 200 period, exactly. But we see the indicators following suit, gave the warning. MT Synth was definitely building to the negative side. Bullish herding was being lost. Interesting that there isn't bearish herding yet. Usually I would see some bearish herding with that type of a move coming in.
I think we had a pretty full bullish herding. So yeah, we should see some bearish herding coming in pretty soon here. It has to hit that 50% level.
Sure.
So after it passes that 50% level on the MT XL, we'll get it.
There we see, I might as well pull up there we see we just turned negative. It started out positive and the volume just crossed over recently too. So lots of roller coaster rides in the internals.
It's been like that for a while. It's crazy.
I just love having these views into seeing what's happening, like when that big spike happens, because it just shot up in the morning, like right at the open. We got two new all-time highs here, but yeah, the NDX for a little while was actually shooting up with it. It was like, that's kind of interesting because it's not a green. Then here comes reality. Oh, we got Tom at the door. I better let Tom in. Got some interesting things definitely happening there. Oh yeah, now it's even falling off my chart. Going down to that next level.
Yeah, if you take a look at the cash index, the S&P 500, it hit a new high and then completely reversed. I don't know if this signals anything or not, but I mean, it hit a new high and then completely reversed. It looked pretty strong for a while, but man.
Yeah, 44.45 and 21 cents. And then we broke 35.268. Was it at the exact same time? It was within 5 minutes of each other.
Yeah, it was just within a short period of time there. Yeah. Yeah, hit a new high on the Dow Cash Index, hit a new high on the S&P 500 Index, and they both reversed quickly.
Good morning, Tom. Good to see you.
Morning, Tom.
Pull this over. I don't know if you got a chance to see this yet. Tom just shared it, but I was watching because whenever we get big, massive moves up, I think of, what's actually happening here. And I had to pull up some of the news and I see, they're getting ready to pass another $1 trillion in what they're calling the infrastructure bill. And Tom was happy enough or good enough to send over. Yeah, it's in there, but it's not a whole lot of infrastructure actually. So,
of course,
strangely named John Kennedy. I never heard of that guy. Good to have that name going into politics, right? Senator down in Louisiana, apparently he's calling out, hey, we just got this thing. It's longer than the Bible. We haven't had a chance to read it, but they want us to pass it. And yeah, guess what? There's nothing in there that says it. And there's no infrastructure in there hardly at all.
It doesn't surprise me at all. I think that, there's so many local municipalities in the states. The states are going to pass it down to locals, but there's so many states and local municipalities that are hurting, not collecting real estate taxes, not collecting sales taxes because nobody's buying anything locally. They're all buying it online these days. And so they're dying. They're really getting hurt. I'm not surprised. I think this is just a lot of, let's keep the lid on this thing,
Yeah, how long can they keep that lid on this boiling pot is the question. Like he says, he puts in here in quotes, additionally, this bill is an inflation bomb. The bill's going to make prices worse. He just got back from the gas station. He's quoting here. Oh, yeah. What do we got? They're claiming money in here. So good. Reed will Tom put this in the channel for you guys to read. So check it out. Thanks, Tom, for sharing that guy. And speaking of which, inflation, We got another gap up on the UUP and Dixie, so the dollar index is moving up.
It is. You're starting to see the reaction, I think, to all these the financial stimulus. What happens is the money is actually not being created; it's debt. So it's going. They have to float the bonds. U.S. Treasury is coming up with the cash by floating the bonds. They're lucky they still have some buyers at these interest rates, but they still have some buyers because the bonds are inversely related to rates. So if they keep rates low, we'll see bonds go higher, and that's the only way they can get buyers because the rates are nothing. You can't get a rate on a bond. What's the 10-year? 1.3. 10 years you got to wait for 1.3.
Yeah. And that just recently was almost down to 1.1 and almost hit.
Wow. Yeah.
Yeah, I was watching. I did notice big, huge gap up over the weekend, but then it dropped right away on the short-term one. This is one they have more control over, is that short-term 1 year. But it's always interesting to watch that curve.
Yeah, I didn't mean that there was 1.3% in 10 years. Annual, but,
right? Annualized over it, exactly.
But you gotta think one. I mean, look, if inflation, like they said, was 5%, it's gonna hit 5%. Well, that 1.3% on a real rate term is actually a negative 4%.
Well, you can't say negative. We're not doing negative rates, Dave. They didn't say that.
But in real terms, they're negative already, and they've been negative for a while.
When everyone's watching
inflation,
just taking a quick peek at the 30-year here too, which obviously relates to mortgages. We see that was trending down. That has kind of broken out here in the last couple of days. Are we going to see the 30-year come back, and how will that affect homes? Because that's one thing, they keep that low because they want people buying. If that starts creeping back up towards 3%, what will that reaction be? We'll have to pay attention to that one.
Anybody out looking for a home right now, I think, is buying at the top of the market. Yeah, you're going to get a good rate, which kind of will help. But if your home price drops, below the price that you paid, it doesn't matter what your rate is, you're underwater.
Yeah, as long as if anyone's buying, lock it in at a fixed rate. Do not get a variable rate would be my recommendation. Obviously, we don't give advice, but I would say if I was buying a house right now, I would buy it on a 30-year locked-in rate and not anything that's variable, because that's how you get bit.
Absolutely. And then if rates do rise on the 30-year, guess what's going to happen to both home prices and affordability? So people now, as soon as rates start to rise and tick higher, you need more of a monthly payment. And everybody kind of judges what they can buy based on the monthly payment. Well, if the interest rates continue to go higher, then that monthly payment is going to get larger and larger and larger. And it's going to price a lot of people out of the market. So it doesn't matter which way you look at it. I think housing prices are going to decline, at least for the next year.
Yeah, that's why I've been telling family members that are in the market, it's like, you might want to wait just a little bit. Rent for another year, and then we'll see what happens.
Yeah, that's a good piece of advice right there to family members.
I can give them a little bit of advice because they're close.
Right.
You guys can't take my advice because I don't give it to the public. I just talk about what we would do.
Right. Starting to see continued weakness here. Well, we're continuing to see weakness in the NQs. ES completely made that about face at 44.38. Was that it didn't happen to be a fib level. Well, that's the futures, but it doesn't happen to be one of your fib levels.
I don't have that drawn currently, so that I'm not sure of.
Okay.
I could pull up some indexes and take a look.
A real sharp reversal off of that. And I've been waiting for a reversal in the market. I don't know if this is one of them, but we've seen a lot of internals that are weak. We've seen futures not keeping up with the cash indexes. They've been lagging behind. An inverse market on that. And I don't know. We've seen a lot of signs that there's a potential top here in the market. I actually posted a couple things in the real-time update service this morning, a couple of charts you might want to pull up when you get a chance. But I think we're going to see at some point here a reversion to the mean. So a reversion to the mean in this case is probably going to be the 200-day moving average. Is there a 200-day on there?
I only have the Renko Cloud on this one right now. I can definitely pop it on.
Okay. Let's see how far that is.
Actually, don't do a lot of. This will be fun.
I think you could probably put in the 200 DMA in that search box there, and it'll probably come up with one that's already pre-configured.
That'd be better. There we go.
200-day simple moving average. That's fine. I think you had to hit the plus sign on that.
Yeah, it looks like it's there. I just need to
turn
off this guy.
Nah, that can't be the 200. You got 9 MA and you got 200. I think 200
Let's get this guy out of here. There we go.
Yeah, where's the 200? Where is the 2? It's way down there.
4,000.
Yeah.
Tom had added, I do get good suggestions. Well, thanks, Tom. You got a 2.25% refi back in Marks. Good job. And do it as long as you can. I wish I could get a 50-year mortgage now. I'd do that all day long. Sure, I'll pay that back. I'll make it to 100.
2.25 is pretty good. I think, you know what, if they really want to keep a lid on this market, they're going to have to continue to buy treasury bills and bonds. We may see interest rates below 1% on the 30-year before we're done, but we'll see. So,
I'll trace this back and see where we get. Let me run through a little sequence here quick. So there was one, it hit that. Just barely didn't tick it, but so we'll do it from when it did. And we'll do a second one. And I'll try not to kill your eyes too bad here, but I'll just modify them. Whoops, I don't need to do that. Wrong button,
Yeah.
sorry.
I'm squinting a little bit because I got light right in my eyes.
So here's
But
as
you may
low
have
as
to
it,
refi that again, later at an even lower interest rate, Tom, and you, Dan.
that would be there. Oh, look at this.
Woo, really close. Really close.
We had a pullback. Actually, we still got to go to 45.99.
Yeah, but we turned negative on the S&P 500 now.
Yeah, it was real close to that 44.53.
Yeah.
So they might be front running. Who knows? Fun to watch those guys. I'll move that guy over there. Oh yeah, they're all. ES is down at the next pivot level. That's the main one too. That's a nice exit point if anybody took a short. That's where I would exit if I was in a short right there after seeing that. Take the money and run. Take it off the table. Let's see, what do we got here? Oh, I should probably bring over, this is kind of interesting too. We always look at the daily market timer spreadsheet, right? So let me pull up the most recent one. I found this, we haven't seen this in a while. I think it was in both the NASDAQ and the Dow. Whereas we've had, triple digit days up and down recently. So volatility is definitely, as we see, elevated in the hundreds. No bearish or bullish hurting on either side for 2 straight days. That's pretty interesting to me. We don't see that very often.
It's unusual when both of the days had 100 point, one in advance and one in decline. That's unusual to see no bullish or bearish hurting at all.
And when we see no real herd going one way or the other, that's where I think we can see a lot more, price manipulation. They can move it where they want to just because there isn't a main flow going anywhere. There's no strong current, if you want to call it that. So that's, I think, why we're seeing a lot of this back and forth. We had an 8% drop, then a 9% raise in volatility as that algorithm goes. So those are drastic changes. If you get over a 5% move, that usually signals something's going to happen. So we get back-to-back days up and down. That's rare, that from what I've seen.
Yeah, I charted MT volatility in the real-time update service. You might want to bring that chart
Oh
up.
yeah, I did see that.
And the swing algo on that has also turned lower.
How much time was this over on this chart?
About a 39-day period.
Okay. So we're going from 80 up to 120. It's bouncing off that 120, it looks like, and it's turning back up. So that was as of yesterday. So that probably lines up with, you said this was on the Dow, right?
Yes, that's on the, well, it's on the NYSE.
Yeah, okay.
Which is the spreadsheet that we use for the Dow and the S&P 500. So it bounced off that like 100 level, and it's starting to move back up again. So that 100% level is a demarcation between the bears and the bulls. If it stays over 100%, then it is bearish. There's more bears than bulls, and so it's kind of interesting. We've been kind of riding this 100% wave for about 2-3 weeks here, and it hasn't gone down. It really hasn't declined, even though we made a new high like we did this morning.
That's another anomaly that we watch for. If we're making new highs and volatilities at recent highs as well, that's a signal that something could be amiss. That could be that lid starting to crack and the steam coming out.
Absolutely. And this is not the VIX. So it's not volatility as far as price goes. It's volatility of the internals. So it's a different type of measurement.
We're definitely gonna have to add that to the main spreadsheet, I think, because it's fun to track that along with the LT signals and the up and downs. We'll get a tab going on that. Well, we are getting close to the top of the hour. Look at that. Interesting. You're welcome if anybody closed their shorts before that bounce happened. You don't have person's pivots, start looking at them. That's my free tip for the day. Look at person's pivots. We'll be talking about those coming up. We've been talking about it. Tom, I'll give you a little shout out quick. Thanks for being the first one to join our new high-level mentoring program that is starting in a couple weeks. It is being officially released via email details later today. So look for that coming out. Tom is going to be in there. Tom says slow clap.
It's Tom. Can't wait to see you in there. It's awesome.
Yeah, Tom's first one in line, and then I have a feeling we might have to limit it because we might have too many people. So we'll see what happens.
Yeah, because we're only running one session over the 5-week period, right?
Right, exactly. And we don't want to get too many people. So if you're serious, watch for your email this afternoon and with the details.
Yeah, we want to keep it nice and interactive. We want to be able to, give everybody a chance to ask the questions. Do some live trading back and forth. So really personal kind of attention to everybody who joins.
So the day is here. It is live. Tom knows the secret, but everybody else will know the secret later today. So if you got any questions after the fact, you can always hit up support@tradingology.com. We will answer any questions you have for your emails if you got around it. Tom says he's 5/9% certain this will be the glue that puts everything together for him. Well, we appreciate it, Tom, and we look forward to your results after the program. That's the best thing. That's what makes us happy, is watching you guys succeed after the fact.
Absolutely.
And girls. We got the girls traders in there too. It's not just the guys.
Between the two of us, we have about 50 years experience in trading. But we're never too old to learn new stuff. So, we're the interaction that we have with students. And we've learned some things from our participants in the past, the high-level mentoring option program from a couple of years ago. You always learn new stuff. Everybody has a different perspective. Everybody comes from a different angle. They see things that you can't see. That's why, this is kind of like a mastermind almost for trading. And when you get involved with other people, you see things from their perspective, it kind of opens your eyes. And so that's what we hope to bring to the group, as well as participants participating and, giving us feedback and, what's working for them. And then we incorporate all that. And that's what makes the continuing membership beyond this beyond this mastermind high level mentoring program so important. So it became, having the live trading rooms, being able to interact on the Slack channel, build your knowledge, and knowledge is really the only thing that's going to keep you in the game.
Yeah, absolutely. And speaking of that, there is a few things that I've been given from members that are giving their feedback saying, hey, I love this. I did this little tweak. If you want to share this with people, let me know. There's a few of those that are sitting on the file box in the digital cabinet that need to be shared too. So I'll dust those off pretty soon here and I get that out there, because I always just want to vet things and verify things before I share it out there. But there is still a couple of those in the hopper. But that's how busy we are right now with getting everything set up. And just it's tough to keep up. So we're doing the best we can. But yeah, we love the member interactions. All of us together make it stronger. Appreciate all you guys. And with that, we'll take one last look at the internals. And it looks like definitely not an agreement on the NYSE side. A little bit closer on the NASDAQ. So this might be a real down move if that continues. Keep your eye on that. It's getting a little bit of separation, but negative across the board and positive across the board. So we might even have to have like an old school volatility arbitrage revisited. This would have been an interesting long YM short NQ would have paid off in spades.
NQ broke through that pivot, so we'll see what happens.
All right. Well, Dave, you have yourself a great afternoon. We will be seeing you guys in the Slack channels, and then we'll catch you back on Tuesday for the next one. Or Thursday, excuse me. I don't even know what day it is anymore.
I was going to say, wait a minute, what day is it today? Yeah. Oh, yeah, today's Tuesday. Okay. Yes, we will see you all guys on Thursday. You know what? It's like we're still up a little bit on the markets here. That NASDAQ is actually down 100 points now. But whenever we do the trading room, there's one index that always goes down.
Right. It never fails.
Never fails. So just when we're scheduling a trading room, find that market that's going down and front run us.
Exactly.
All right, guys. Have a great day. We'll see you.
Take it easy, Dave. See you, Tom.
Bye, Tom.